Hello everyone and welcome to ICM's midday session. We had a couple of economic indicators coming out from Asia and then the United Kingdom earlier today. So from China we had the industrial production, which showed an expansion by 7% year on year. This is just confirming the economic recovery in China. Also the retail sales jumped by 5%, which was almost slightly as expected. So these indicators are just confirming the strong economic recovery in China, which is justifying the flows to the Chinese yuan and Chinese stock market. Moving to the United Kingdom, we had also the claimant count for November, which rose by 64.3. That's just a reason. This is just because of the restrictions that took place in November due to the spread of COVID-19. So definitely we're going to see such numbers. Unemployment rate for October rose by only 0.1% to 4.9 from 4.8, which is lower than expected or the consensus of 5.1%, while also average hourly earnings or average earnings index jumped by 2.7%. So these were the top economic indicators today. Moving to the platform, we're not seeing much of a move on currency pairs. We're just awaiting some key events, among them any developments on the Brexit front, also the US fiscal stimulus stocks, and tomorrow the Federal Reserve meeting. So starting with the euro dollar, we're still trading in a tight range. So moving to the hourly chart here, you can see that yesterday we rose exactly towards the previous top of almost 121.75. So we're trading inside range still. You can just join the recent bottoms with the trend line. We're almost trading near the same bottoms, finding support near the 100-hour exponential moving average. Any drop below the 100-hour exponential moving average and the trend line could just drive us lower again towards the 200-hour exponential moving average sitting at 121, and then towards the previous support of 2050. So you can just highlight these key levels as support and resistance. If we were able to break above 121.75, we could be rallying towards 122.15. Moving to the British pound against the US dollar, we're able slightly to cover part of the gap before bouncing higher again. On the bigger picture, we're still trading inside the channel, so you can just draw the channel that we highlighted on Thursday. So we're still almost trading in it here. We had an overshoot and then the market moved lower again. We've also had a bit of a bounce from the channel. So on smaller levels, moving back above 133.48 could just raise the chances of rising towards the top of the channel of 134.05, and then a continuation towards 34.40, while a failure here near the moving averages and the break back below almost 32.90, 32.80 could just lead to the recovery of the gap and a drop towards almost 32.30. The dollar against the Japanese yen, following the break of the smaller range that we were trading in for a while, 103.65, 104.70. So we're able to break below the range. However, wasn't a strong break, and then the market moved again towards 104, 104.10, 104.15 that we highlighted during the week ahead yesterday. So this remains a key level. A move back above 104.15 could just drive us higher towards 104.75, and as long as we're below it, we are poised to retest the bottoms. You can also just draw a channel here that we are currently trading in. So we're almost trading inside this channel, and the bottom was almost exactly at the lower bound of the channel. Moving to the US dollar against the Canadian dollar, we're trading sideways. US dollar against the Swiss franc, we're trading sideways, awaiting some key drivers. You can just draw a trend line combining the previous tops and set a horizontal line combining the previous bottoms. So here, this is in technical analysis, classical technical. This is a descending triangle, meaning that we're going to continue in a trend. However, this needs some key movers for the dollar to weaken further, and since we're waiting at the Federal Reserve, this could just be take some more time. So also you can just draw a parallel line towards, so we drew a line combining the tops. You can draw a parallel line combining the bottoms, and maybe we could spill towards 88.20, which is the bottom of this channel, and then move back higher again. Any break above the upper line of the channel, which is currently coinciding with a 200-hour exponential moving average, could just drive us a little higher towards 89.45. The Australian dollar against the United States dollar is having a bit of a pullback today. We had this double top formation with divergence. If you can just add the RSI Yeah, the RSI indicator, you can see here the divergence between the tops. So it's a clear divergence. We have three top divergence. So here we have lower top, a higher top, and the higher one, with the RSI dropping with three of them. So watch out for any break below the 100-hour exponential moving average. It could drop initially towards the 200-hour exponential moving average near the previous top of 74.75. So this could be the possibility of the coming move for the Australian dollar. You can also combine the previous bottoms, which we are currently trading at. So this is the trend line that we are currently trading at. If you believe that the market is going to continue to the upside, you can just draw a channel and just set possible extension to the upside of the channel, which could sit near almost 76.40. But such a move would definitely need a key mover, maybe a weaker dollar post-Fed. The New Zealand dollar against the United States dollar, almost similar formation to the Australian dollar. So you can see here a double top formation with divergence in the RSI, and now moved lower towards the 200-hour exponential moving average. So what you can just set as these levels, 71, 71.20 as key resistance area, and support remains near the 70 area. So any break back to further lows below today's bottom could just lead to a bigger move lower towards the 70 psychological level. The US dollar against the Canadian dollar. We're trading sideways inside the previous range. So you can draw these bottoms here. You can just draw this trend line combining the previous tops, and also add another trend line combining these previous bottoms. So this is almost similar to also a triangle. However, we need the same dollar mover for this to continue. So commodity currencies and major currencies, they're just in the same almost formation, awaiting some broader rally. Also, this is just a channel. You can draw 1, 2, 3, 4, 5. We are trading inside this channel almost. So a break above the upper boundary could just drive a bigger correction towards 28.50, while a failure here and continuation to the downside could just drive the pair lower again towards 26.70. Gold prices, we're still inside the range, 18.18, 18.48. Maybe we could be trading sideways here, awaiting the Fed's decision and any developments on stimulus talks. A break above 18.48 could just lead to an acceleration, the upside move towards 18.74, while a failure here could just lead to a retest towards 18.18. Moving to silver, almost similar formation to the one that we're seeing on gold. So you can just draw these levels that we are trading in sideways, 23.60 and 24.40. We could continue trading sideways until we have key drivers. On the top, a break above the top could just lead to a retest towards 24.84 and 25 level, while a failure here and a bearish scenario could just lead to a drop towards 22.90, 22.60 area. Oil prices are rising a bit on the day despite the talks of further lockdowns. You can just draw the channel here, draw the bottom, the trend lines, combining tops and bottoms, so it's clear where we're trading currently. And just use a trend line to combine the previous tops. So any break above the trend line could just lead to further move higher or confirm another move higher towards almost 48.20. However, failure here and disappointment with just a bit of more bearish scenario could just lead to a break back below 46 level. You can see how many times here we were able to rebound from the 200-hour moving average. So any other drop towards this moving average again could just lead to a bigger drop or failure in rebounding, and there we could be seeing maybe a visit to 44.70 or 43.60. So these could be the possible levels if we were able to break below the trend line and the moving average. 45.10 almost, and 43.90. These were the previous bottoms. Moving to Dow Jones, still on the bigger picture, we're still trading inside this range. So yesterday, after rising to record high, we were faltering and moving back lower towards the bottom of the trend line, or the bottom of this shape. So we're currently trading, and definitely the decision on fiscal stimulus and also the Fed's monetary policy meeting could be a clear mover for a breakout of this pattern. So maybe we could be on a negative or on a bearish scenario, we could be breaking below the trend line, moving towards 29,400, 450, and even lower towards 29,160. While a bit of a bullish scenario and an upside rally could just lead to record highs, maybe trading near 30,500. So this is all for today's session. All the information, analysis, and opinions mentioned in this session, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all for now. Thank you all for joining and wish you safe trading.